Hello, welcome to our episode again. I'm Huang from Invesco, head of ETF Business in Asia Pacific. Today, I'm joined by Kathy Kriskey, our senior commodities and cryptocurrency strategist in the US. In this episode, we will give you an introduction overview of digital assets and how investors can navigate this interesting asset class through ETFs. Cryptocurrency has been existing in the market for some time, has been a buzzword when we're talking about digital assets. But it's still relatively new for a lot of people. So Kathy, can you tell us more about what cryptocurrency is?
Absolutely, Christine. So in order to truly understand what cryptocurrencies are, we need to go back to understand why they were created. If we look back to the origins of Bitcoin specifically, we learn that Satoshi Nakamoto, a pseudonym, launched Bitcoin 16 years ago in the time of the global financial crisis. At that time, many people were frustrated with the centralized banking system, and Satoshi worked to create a digital currency which wasn't controlled by any central banking system. It actually was the opposite. It was decentralized. And this industry became described as DeFi, or decentralized finance. To create a currency, there needs to be something that gives it value. Like the US dollar used to be backed by gold, but now is backed by the full faith of the US government. For Bitcoin, Satoshi used a proof of work concept. So computer experts work or mine using encryption algorithms, and the process ends with the creation of a new Bitcoin. The miners are rewarded with Bitcoin, which is then added to the blockchain ledger. So Bitcoin can be used as a medium of exchange and as a store of value in place of fiat currencies like the US dollar. However, unlike traditional fiat currencies, since Bitcoin is decentralized, it doesn't have the backing of governments or need banks to facilitate transactions and store the currency.
It sounds like to me that Bitcoins trade like gold. What about correlations to other asset class?
Today's investors see Bitcoin as an interesting diversification investment and as a possible store of value similar to gold. Not only has the average monthly volatility decreased from over 120% in 2013 down to 53% this past year in 2024. But Bitcoin's correlation to U.S. equities and U.S. treasuries is 44% and 15% respectively. Since there is a finite amount of Bitcoin that can ever exist, there is increasing demand, especially if these institutional adoption ramps up. Bitcoin is also deemed to be a store of value investment. Many investors also see cryptocurrencies as a potential high growth asset. In 2024, Bitcoin outperformed all other asset classes, posting a return of 120%, surpassing U.S. equities' big 25% gain.
So Kathy, you mentioned like cryptocurrency is a high potential growth asset, and they have already approved its value in investment today. So to most investors, digital assets is still very new asset class, and they couldn't be found from a traditional portfolio. So how do you view cryptocurrency's role fit into today's asset allocation model?
That is so important. As investors start to learn about digital assets, many get overexcited about their potential returns. However, it is important to remember this asset class is volatile, so allocations should start small and well thought out. Getting off zero is the key here. Initial investment should be less than 1% as investors learn about how it behaves with the rest of their portfolio.
So, Kathy, you talk about the cryptocurrency ETF introduced in the US in early 2024. So what's your views in terms of the cons and pros of purchasing physical cryptocurrency versus cryptocurrency ETF?
That's a fantastic question because one of the biggest cons to investing in physical cryptocurrencies is the risk and complexities of managing those wallets and encrypted keys we were talking about. Now that I'm a crypto strategist, everyone tells me stories about lost keys and cryptocurrency that is gone forever. Also, some platforms are unregulated and prone to security and hacking risks. Obviously, the ETF wrapper is backed by physical cryptocurrencies. It's easy to buy and sell on major exchanges, and there is no need to manage wallets or keys. Aside from investors not personally owning the coins, it's just an easier, hassle-free way to gain exposure.
So thank you, Kathy, for helping us understand cryptocurrency and the physical backed by cryptocurrency ETF wrapper. And this ETF wrapper makes crypto investment much, much easier for everyone to manage. We hope you enjoy this episode. Looking forward to continuing with the Invesco podcast in 2025.